Hi, good afternoon to all of you. Yes, ma'am. Very good afternoon. Yes. Hi, Sanju. Hi, Mankan. Hi, all of you. Very good afternoon. Yes. Very good afternoon. Yes, ma'am. Please give me confirmation about audio and video clarity. Then we can start our discussion straight away with the income from house properties chapter. So today I will try to take the two more chapters also. Today I will try to take the two more chapters also. So today totally CMA inter sessions only. So CMA final sessions we can try after day after tomorrow. Tomorrow also I will take CMA inter only. Don't think about it. I will try to cover the what extent I given as a promise. I will try to cover that all the chapters today and tomorrow. So the remaining chapters, yes, I will try to upload the recorded versions. Yeah. So now we are already done with respect to the basic concepts chapter. Yes. Next we are done with the second chapter is what? Yes, residential status over. Revision session, residential status over. Third one, we discussed the agricultural income also. So every problem I think you are already solved based on these revision classes. Yes, now our target in this session for 2 hours, we want to cover the next chapter, that is an income from house property. So every attempt there is a short question from this chapter, that is also practical questions we can get for 7 marks. If you are not at all solve this chapter, out of 100 marks GST and including income tax, you will lose 7 marks definitely. Very easy chapter and small chapters. That's why we can discuss first provisions in a strong manner. Then after we can solve some questions from that recently released ICMI workbook also. First listen concepts, then automatically you can solve the problems. I know. So in which area students are having the doubts also. That's why I will cover that all the things in a deep manner in that areas. Please check it out. Now, sir, we have 5 heads of incomes. First one is nothing but income from salaries. Second one, income from house property, PCBP, capital gain, income from other sources. Now our agenda to start about the income from house property. Sir, definitely I'm earning the some incomes, but I want to classify that all the incomes into different heads of income by using the charging section. So just first head of income we are started, that is section 28 to section 27. We have provisions relating to income from house property. Within that section 22 is nothing but charging section. If you know section 22, then only you will get a clarity about the what are the list of incomes are chargeable to tax under the head of income from house property. Sir, I have a numerous incomes. Out of the numerous income, under income from house property, what are the incomes will be taxable? If you know the charging section 22, then you can say easily these are the incomes are taxable under the head income from house property. So now 22, 23, 24, 25, 26, 27. Exactly we have 6 sections in this chapter. If you learn these 6 sections, then this chapter will be over. 7 marks. We want to get 7 out of 7 from this chapter. That is only our target. Now, straight away, we can start our discussion with the charging section. It is very important. Without charging section, yes, entire head of income is useless only. Yes. Sir, how they are expressed the charging section in section 22? Yes, they are saying 3 conditions. If these 3 conditions are satisfied, that particular income will be taxable under the head income from house property. What are the conditions, sir? First condition, they are talking about the property. They are talking about the property. Property should be building and land attached to that building. First one, building, and second one, land attached to that what ma? Building. So example, here one building is there. This is a property under this act. And the land is also attached to that building. So that's why this land also house property only. Second example, yes ma, here land separately is there. Land nowhere connected to that what ma? Building. Now it is not a house property, but building is nothing but treated as what ma? House property. Remember, property should be building and the land attached to building. Second condition they are saying, for this property that may be building, land attached to building, for that SSE must be the owner. Next, third one. Sir, what is it uses? You can use it for any purpose, but you should not use it for your own business or profession. If you are using it for your own business or profession, it will be taxable under the head PCBP. If you are not using under the business, not using for the business or profession, then only all the three conditions if satisfied, then that income will be taxable under the head income from house property. Again, I am repeating the three conditions. First condition, property should be the building, land attached to the building. Second condition, SSE must be the owner. Third condition, it should not be used for own business or profession. If you are using it for your own business or profession, that will be taxable under the head PCBP. Next one, example Mr. A is an owner of the house property. He is given these. So first of all, it is an property building, and condition 2, SSE is an owner. Third one, he is giving it for that let out to others. I am not using for my own business or profession. I am giving to that what ma? Let out to that others. So that's why whatever the rent here Mr. A received, that is chargeable to tax under the head income from house property. Now I will tell you the summary. Listen carefully. Summary. If you are an owner and you have an house property, if that is used for self-occupied means what ma? For residential purpose, it's okay. Condition 1 is satisfied, that is an house property. Condition 2 also satisfied, SSE is an owner. Then third condition if you are using for the residential purpose, okay, that is taxable under income from house property only. Now clearly they are saying it should not be used for your business or profession. It should not be used for that what business or profession. But here you are using it for the business or profession. So that's why it is taxable under the head PCBP. So for your own business or profession, if you are using that is taxable under the head PCBP. Next, let out to that others So that fellow is using for the residential purpose. That fellow is using for the business also. That is irrelevant. Because only one thing, you should not use this building for your own business or profession. If you are giving the let out to others, that other person can use it for the residential or business also, it's okay. Always taxable under the head income from house property. Third one, unoccupied also taxable under the head income from house property only. Only one thing you should remember, if it is used for the own business or profession, it is taxable under the head PCBP. In remaining all the cases, let out to others, unoccupied, yes, residential purpose, if you are self-occupied, always under the head what income from house property. Just give me a confirmation are you understood up to now? Three conditions you should remember First one, property means. Second one, for that property SSE must be the owner. Third one, he should not use that building or land attached to that building for the own business or profession. If you are using for the residential purpose, okay. if you are giving let out to others, that other person can be used for any purpose also okay, unoccupied also okay, but one condition, yes, you should not use it for your own business or profession. If you use it for your own business or profession, it is a taxable under the head PCBP. Now, so I will explain that all the condition again in a detailed manner. Listen. Condition 1, property should be building, land attached to the building. Here, please remember, it isn't property. It is also property because the land attached to building. So that's why if any rent receiving from the property, that may be building, land attached to building also, taxable under the head income from house property only. Now, building is an house property, so that's why if any rent received, that is an income from house property only. But here, land nowhere connected to the building, land nowhere connected to the building, it is not a property under the income from house property. If you are receiving any rent from these vacant land, it is taxable under the head income from other sources. It is taxable under the head income from other sources. Are you understood, ma? If that is an house property, that rent received from house property is always income from house property. But it is not a property under this head. So that's why if any rent receiving from the vacant land, it isn't taxable under the head income from other sources. Now, sir, what do you mean by the building, sir? Remember, if that is a residential building, 4 walls, 1 roof is enough, ma. So here cement walls, mud walls or anything also can be considered as walls only. If you want to call one thing as a building, if it is used for the commercial purpose, 4 walls enough, ma. Without roof also we can consider it as a building for commercial purpose. Second one, SSE must be the owner of the house property. Here, owner can be 2 types, ma. First one, registered owner. In the government records, you are registered as an owner, that is a registered owner. So, registered owner also okay, but if you are a deemed owner also okay, that is only section 27. Last section in this house property, 22 to 27, the last section is talking about the income deemed owner. Sir, some ownership basic points for MCQ purpose, ma, listen carefully. Sir, always the legal owner includes the legal owner, that is a registered owner, as well as deemed owner also. Next, sir, for this land, Mr. A is an owner. I am taken this land on lease and B constructed the building, ma. So now, so in the hands of B, can you tell me which head of income will attract my income from house property? Sir, even though person who owns the building need not be an owner of the what, ma? Land. So example I will tell you, many shopping malls are constructing on the leasehold lands only. Example PVR. Yes sir, PVR multiplex is constructed on leased land only. But if any rent receiving from the outlets, shops outlets, that is a taxable in the PVR hands only, not in the hands of landowner. Are you clear? So I am an owner of the building, that's enough. Need not to be and become an owner of the what, ma? Land. Now, sir, in which year we have to check the ownership, ma? Previous year, if an SSE is an owner, that's enough. SSE need not to become as an owner in that assessment year. Example, during the previous year, I am only the owner. I am enjoying that property. But in that assessment year, I am transferring this property to others. No problem. You are an owner of the asset or house property in previous year. That itself, it enough to consider as an owner. Now we can charge the income in the hands of the owner only. Now, yes, ma. Mr. A and Mr. B having the dispute over the one property. Now, sir, who having the disputes, ma? Mr. A and Mr. B having the dispute over that one property. So they are going for the court of law. So now court given the judgment in favor of Mr. A. So they are given the judgment in favor of Mr. A. Now Mr. A only now considered as an owner. if title of ownership is under dispute, in court of law, decision about the ownership will decided by the what ma? Court only. Are you clear? Title of ownership is under dispute in court of law, then decision about the ownership will discussed by the ESMA, will decided by the court only. Sir, but up to this decision, who are taking the position, ma? Mr. B. So now who having the position, that person needs to pay the tax until the court decision. After that, he has to compensate this total things to the Mr. EA. Sir, 4 years, yes sir, case in pending in the court, ma. Till that 4 years, who are enjoying the property position, ma? Mr. B. So until the court decision, Mr. B is required to pay the tax. Yes, and he is only receiving the rent from this property. After court decision, Mr. B needs to compensate the all the things to the Mr. A as per court judgment. Are you clear? Yes, give me confirmation about the basic points relating to ownership. Ma. These are all the points are important. You can get it as an MCQ. Are you clear? Now, we know already ownership, it includes the registered owner as well as deemed owner. Now, very important discussion we are going to start, ma. Deemed owner. In which cases we can call one person as a deemed owner under section 27. How many deemed owner points are there, ma? First one, gift to spouse. Second one, gift to minor child. Third one, holder of impartable estate or asset. Fourth one, yes, section 53A of Transfer of Properties Act. Fifth one, allotment of a plot in cooperative society, company, AOP, etc. Sixth one, a person holding the right in property. Property means what, ma? House property for a period not less than 12 years. In these 6 cases, even though a person is not a registered owner, but we can treat that person as a deemed owner, and in the hands of that person, we can tax that income from house property. So first case, gift to spouse. Example, I will tell you, husband is an actual owner of the house property. But now he is giving this house property as a gift to his wife. Now, who are transferring this property, that person is called as transferor. Who is receiving the property, ma? Yes, transferee. After, yes, receiving, yes, definitely they can do the registration on their own name. Registered owner now Miss wife only. Because after receiving the property, yes, they can take the registration also. Now, can you tell me how we can give the gift, ma? Without consideration or inadequate consideration? Directly I can give it to my wife, or either I can transfer through the third party also. Remember, gift means without consideration, inadequate consideration. Whatever that income is earned, as per the yes normal rule, it is taxable in the hands of registered owner. But example, I will tell you, I have a salary income. If I am receiving any income from house property, husband having the salary income, and if I am receiving any income from this house property, then I need to pay that more and more tax. Wife is a housewife, homemaker. She not at all having any income. Now, if income from house property is shifted to the wife, she can claim the basic exemption limit. She can pay the rebate. She can take the rebate also, and she can pay the less tax. That's why I'm transferring house property intentionally to that my wife for getting the tax avoidance. In such cases, no problem, sir. You can give gift, no problem. And the registered owner is whom? Wife only. She can enjoy that property. Whatever that income is earned, that is taxable in the hands of husband only. Now, husband is considered as a deemed owner under section 27. Husband is treated as deemed owner under section 27. Now, what are the exceptions to this deemed owner, ma? First one, if you are transfer for adequate consideration, that is not considered as a gift, ma. 50 lakh house property, I am transferring it for 50 lakh. So there is no concept of gift. Sir, if anything, if you are transferred before marriage, there is no husband and wife relationship. That's why deemed owner concept is not applicable. Next one, at the time of giving the divorce, etc., if they want to if they are agreed to entered into an agreement to live apart, that means at the time of taking the divorce, yes, if you are giving any house property as a gift also, yes, on that occasions deemed owner concept is not applicable. Are you clear, ma, up to now? Second thing, if you are the given the gift to the minor child also, deemed owner concept will apply. Yes, can you tell me the parents here are acting as a transferor of an house property who are receiving the house property as a gift, ma? Minor child. So minor child usually not having any income. So now parents are having that high income, sir. Sir, if any income from house property is taxable in their hands, they need to pay that more and more tax. That's why they are diverting that income from house property to the minor child by way of giving the gift. I think you know gift means without consideration, inadequate consideration. Directly or indirectly we can give the gift, ma. So who can registered owner now? Minor only. After giving the house property to my minor child, yes, I can transfer the registration also to the minor child. So whatever that income arises on this gifted asset, that income now taxable in the hands of the parents only. Parents not an owner, but we can create a concept of what, ma? Deemed owner here. But in the following cases, deemed owner concept is not applicable. If the transfer is done for the inadequate if the transfer is done for the adequate consideration, property value 50 lakh, I am doing the sale to my minor child for 50 lakh, then in this case, there is no concept of deemed owner. Second one, if you are given the gift to minor married daughter, then minor married daughter, so nothing but here also deemed owner concept will not apply. Are you clear? Give me confirmation about your understanding about the first two, ma. In your exam, if you are remember the side headings, that's enough. But in order to understand the concept, I am explaining these explanations. Are you clear up to now? Now I want to take the next one, holder of the impartable estate. Holder of the impartable asset or impartable estate. Sir, example I will take for giving this concept, ma. Father having the 4 sons. Yes, he can distribute this property to the 4 sons equally also, but son 1 is an elder son. Now, as per their family tradition, they have an ownership in one temple. So they can't take this distribution or partition of this asset, ma. They can't take this partition. So that's why it is impartable estate. Impartable estate. Yes, without consideration for major you can transfer, ma. No problem. There is no concept of deemed owner. If you are transferring to that major, no problem. No deemed owner concept. If you are transferring to the minor child only, deemed owner concept will there. Because the major having certain incomes also. So that's why no one can do transferred for tax avoidance to that major. Usually we can do the transferring of an house properties to the minor in order to do tax avoidance. That's why whatever that amount you want to escape from the tax, that is taxable in your hands only as an deemed owner. Now, so here impartable estate is temple. So as per their family tradition, this temple needs to be held by the elder son only. Now, who is an holder of the impartable estate? Registered owners are all 4 persons only. All 4 persons having the right on this temple. But who is an holding of that impartable estate? Yes, Mr. Son 1 only. So that's why whatever that income arising from the holder of impartable estate, yes, that will be taxable in the hands of son 1 only. If any income is there, they can distribute to the other sons also. If any tax also paid, yes, he can recover the taxes from all. But for government, who is a responsible, who is an holder, holding that impartable estate, that holder only required to pay the tax. That's why holder of impartable estate shall treat as an deemed owner under Income Tax Act 1961, Section 27. Are you clear? Third one also. Now fourth one. Section 53A of Transfer of Properties Act, or we can call this as a part performance of a contract also. Remember, important in other heads also we have this section number reference. So deemed owner, gift to wife, gift to minor child. Third one, holder of impartable estate. Fourth one, section 53A of Transfer of Properties Act, that is only part performance of a contract. Example I will tell you. Mr. A wants to transfer the house property to Mr. B. So he's a seller as well as he's transferor who having the registration now. Yes, registered owner is Mr. A only. Sir, in that process, agreement is done in between that Mr. A, Mr. B, agreement done, but registration is not at all completed, sir. Why? Definitely, immovable properties registration process will take certain time. So that's why part performance of a contract is done, full performance is not done. Now, remember, if the following 3 conditions are satisfied, even though who is a registered owner, Mr. A, but we can treat Mr. B as a deemed owner. That means we can treat buyer or transferee as a deemed owner if these 3 conditions are satisfied. First condition, agreement must be bona fide. Second condition, consideration ready to pay or paid. Third condition, buyer already taken the possession. So now who are receiving that income from such a property, buyer. Now we can treat that buyer as an what, deemed owner. Even though registration in the name of whom, Mr. A, but we can tax that income in the hands of Mr. B. Now Mr. B is treated as deemed owner because he taken the possession. He paid that consideration or ready to pay also, and agreement is bona fide. If all the 3 conditions are satisfied, now buyer can be treated as deemed owner. Are you clear, ma? Now, allotment of a flat in cooperative society, company or AOP, etc. Sir, some members are associated together. They are incorporated a cooperative society. They constructed one apartment. Yes, they constructed one apartment. After the construction of apartment, so every flat is distributed to whom? Members. So one member is Mr. A. One member is Mr. A. So all the members are using this property as self-occupied only. But one member is using this as a let out. That means he is giving this let out to others who earn the rental income, Mr. A. Now, registration of this total apartment will be in the hands of cooperative society as a registered owner. But who are receiving that income, Mr. A, because he is given his flat for let out to the others. So that's why he is receiving the rental income. So even though registered owner is a cooperative society, who required to pay the tax with respect to this flat, yes, Mr. A. Now Mr. A is treated as deemed owner. Registered owner is cooperative society, but who is treated as deemed owner for the purpose of payment of taxes, member. So that means if any allotment of flat to that member by the cooperative society, by company or by AOP, yes, that member is treated as deemed owner. Member is treated as deemed owner. The last point in the yes deemed owner concept. Remember, it is a very easy ma. Mr. A is a registered owner. Super. He is giving his house property to the Mr. B for lease basis. So can you tell me? Now, who having the right of lease ma? Lessee. Who are taken this property on lease, that person is called as lessee. Who are giving this lease, nothing but what ma? Lessor. Now remember, if you are taken this lease for 12 years or more, who are actually paying the rent to whom a lessee will require to pay lease rent to lessor. If you are having the period of lease not less than, that means what ma, at least if you having the right in that property for 12 years, you are only treated as deemed owner. You are required to pay the tax on that income of the property. So who is responsible for payment of tax ma? Generally registered owner who is receiving the rent. But if you having that at least 12 years right in that property, you are only the deemed owner. You are required to pay the tax on behalf of Mr. A. Remember, first I am taken the lease rentals period 4 years. After that I am doing the renewal 12 years. Totally, yes, how many years ma? 12 years. At least 12 years also okay. You are only treated as deemed owner. You are only treated as what ma? Deemed owner. Are you clear up to now? Yes, please give me confirmation about your understanding up to now ma. Now, one exception ma. First I am taken for 9 years. Then after I am doing the renewals, always this renewal period is less than 1 year. Yes, if your lease term is month to month or period not exceeding an year, that is not considered as an holding right in the property. So totally 12 or more years if you are taken, that's okay. Or if you are taken first 8 years, then after 2 years, 2 years, 2 years also okay. But if your renewal term is monthly basis or that period is not exceeding 1 year, here all the periods are what ma? Not exceeding 1 year, that is not considered as a term of lease. Now in this we can count it as a 9 years, that is less than how many years ma? 12 months. If you want to count it 12 months, the lease renewal period or lease taken period always more than totally how many years ma? Or more than or equal to at least 12 years. But if you are doing the renewal month to month basis or less than 1 year, that should not be counted in that 12 years term. Now, so all of you, sir, it's only for lease, not for rent. Hey, what you are asking, Ra? I don't know what you are asking also. Frame the sentence again. Remember, he is only receiving that income. He is required to pay the tax. But on behalf of this fellow, I am deemed owner. That's why I will pay the tax. I will pay the tax as a deemed owner. So normally that will be taxable to under income from house property in this person hands only. But on behalf of this person, because I am acting as a deemed owner, now I will pay the tax. Remaining amount I will shift it to the Mr. A. Now, what is the deemed owner conditions ma? Learn the concept overall only. Don't dig that concept in detailed manner. Yes, gift to spouse, gift to minor child. Yes, holder of impartable estate. Next, section 53 of Transfer of Properties Act, that is a part of performance of a contract. Allotment of a plot in a cooperative society. Person holding the right in a property. Property means what ma? House property for a period not less than how many years? 12 years. Then in all the cases we have a deemed owner concept. The deemed owner only responsible for payment of tax on the income of that property. Now, third condition we need to discuss ma, property should not be used for that own business or profession. If building is used for own business or profession, it isn't taxable under the head PCBP. Now, you are running a business by using the what ma? These house properties on rental basis. Example, I will tell you, I am doing the hotel business. my buildings are used for that what I want to get it out the some rental income. My main business objective only to earn the rental income. That's why it isn't taxable under the head PCBP. Remember, I'm giving the let out only. But my business objective, main objective to earn the rental income. Example, hotel business. I haven't two buildings. I'm doing the hotel business. That's why now whatever that income is there, that isn't taxable under the head what PCB. Now, letting out is incidental to business. Example, I'm doing manufacturing business Within that, yes I'm given the one building as an rent to the Mr. A for canteen purpose. So I'm receiving the I'm receiving the some rent from the Mr. B. Sorry, here you can take Mr. B. Same party, how we can give the rent So now you can take here Mr. B. Sir, if I am given this building for the rent to that Mr. B, what is it use? I will tell you. My employees can get the food on time and they can do the work properly. So now my main business activity is nothing but what production. My main business activity is production, but in order to smooth flow of an production, so my incidental objective is nothing but what canteen. So definitely, so lunch break time also can be reduced. If I'm not providing the canteen facility to employees, they will go to the outside. They will come after that lunch break in a late manner. That's why remember, if you are doing any let out of an incidental to your business, that is taxable under the head. That income also taxable under the head PCBP. Now I will tell you, I haven't one building So in that I'm running a coaching institution, but some part of the room I am allocated to the postal services like a professional couriers, DTTC, rent. For rental basis, I am given some property. So remember, my business objective is giving the coaching. If any amount received, that is an PCBP only. My building only. Because I am using it for my business purpose, that is PCBP. But some rent I am receiving from the DTTC, that is also PCBP because that is my incidental objective. If I am having the services of DTTC, my students can get the books on time. Because of that, my business also can improve. So that's why if your main objective helpful PCBP, incidental objective also that income will be taxable under the head what PCBP only. Remember, you should not use it for your business or profession. If you are using for own business or profession or main objective itself, if you want to get the rental income or if you are giving the let out incidental or helpful to your business also, PCBP only. Yes, if you are giving the confirmation up to now, then we can start the actual discussion of the house property chapter. All of you, please give me confirmation. Now we can enter into the actual discussion, problematic area we can start. But without knowing this concept, you can get some confusion also. So that's why I'm taking this. Are you clear up to now? All the three cases we discussed till now. Now, how to compute the income from house property? Listen carefully. If that property is used as a self-occupied, unoccupied, we have to follow this format. If that property is let out property, deemed let out property, you have to follow this format. let out or deemed let out. I will tell you deemed let out property also, remember. Sir, first you have to calculate the gross annual value. So now I'm concentrating on let out property, deemed let out property. As per section 23, you have to calculate the gross annual value minus whatever the municipal taxes you paid. On what basis? On payment, cash basis only. You can take the deduction from the municipal tax. Sorry, you can take the municipal taxes as a deduction from the GAV. Then you will get which value? Net annual value. What is that? Net annual value. So from the net annual value, you can get the 24A standard deduction, that is 30% of NAV. 24B interest on borrowed capital. Please reduce, these are all the things. Then you will get the income from house property. Sir, if you are calculating that income from house property for the let out property, deemed let out property, yes, you will get an answer maybe 0. So exactly, yes, if your NAV is matched with these two deductions, yes, you will get 0. Or you will get income also. Maybe you will get what? Loss also. Sir, income, how you can get? Here 1 lakh, but two deductions altogether 30,000. What is that income you will get? Maybe here you got 1 lakh, but here these two deductions itself 2 lakh. Maybe you will get loss also. That means if you computed that income from house property related to let out, deemed let out property, yes, you will get an income as a 0. Yes, or income or loss also you will get. Next. Sir, here deemed let out or let out property, here you will get rental income. That's why GAV minus municipal tax, NAV we can take. But remember, in self-occupied or unoccupied, in case of self-occupied or unoccupied, so you can't get any rental income. So that's why GAV can be 0. Sir, if you have rental income, I can give the deduction of municipal taxes. Example, if you are using it as a self-occupied also, unoccupied also, let out also, deemed let out also, you have to pay municipal taxes. But that municipal taxes in case of self-occupied, unoccupied, I will not give it as a deduction. Why? If income is there, I will give that expenses as a deduction. But here there is no income. That's why I will not give it as an what? Deduction. So that's why in case of let out property, deemed let out property, you can take the municipal taxes as a deduction. In case of self-occupied property, you can't take it as deduction. Directly we can start the format with the NAV as a 0. Sir, if NAV 0, 24A standard deduction you can't take. So 24B interest on borrowed capital, if anything is there, yes, you can take. So that's why you will get an answer income from house property. But remember, in case of self-occupied, unoccupied, you will get an answer as a 0. That means no income, low loss, or you will get always loss. There is no income from the, yes, loss or 0. There is no income from the self-occupied, unoccupied, because all the incomes are 0. If you got deduction, loss. If there is no income from the, sorry, there is no interest on borrowed capital, ultimate answer will become 0. Remember these shortcuts. In income from house property computation, self-occupied, unoccupied related, you will get 0 or loss. In case of let out, deemed let out, you will get an answer as a 0 or income or loss also. Are you clear, this format? Now we can start the, sir, main 22 charging section, 22 charging section, Now I want to talk about the 23, how to compute GAV. 24A is a standard deduction. 24B is nothing but what? Interest on borrowed capital. 22 charging section. 23, now I will tell you GAV computation. 24A standard deduction. 24B interest on borrowed capital. Last section, 27 is nothing but what? Deemed owner. So one by one sections we are discussing. Shall we start the how to compute the GAV? Yes, for this working note is very very important while you are doing the sums. Remember, how to compute the gross annual value. I will take 15 to 20 minutes. If you know this concept only, then you can do the problems in this our workbook. So computation of GAV is very, very important. So for computing the GAV, always we need to take the help of the four variables. First variable is an municipal value. Second variable is an fair rental value. Third variable is an standard rent. Last variable is an actual rent received. Remember, actual rent received, not receivable, received. So municipal value means nothing but the value recorded in that municipal books. So second, fair rental value means similar property rent. Now I am staying in the 5-floor property. So whatever the rent is charged in the similar property in the same locality, that is only we can take it as a fair rental value. So now 5 floors building this one. Now I don't know what is that rent we can receive. But the same locality, same property is there, that is similar property. What is the rent we are charging for that property? That is only the fair rental value. Standard rent can be mentioned in the Rental Control Act. Last one, actual rent received. By using these four variables only, we can calculate the gross annual value. So step 1, please remember the step 1. Please take that municipal value as well as fair rental value, whichever is. Yes, municipal value, fair rental value, whichever is higher you can take. Whichever is higher. We are maximizing the both the things. Now, step 2. As per the Rental Control Act, we can't collect the rent more than what standard rent. So that's why step 1, resultant amount, always we have to restrict with the standard rent. You need to know the reason. Because we can't collect the more than the rent mentioned in the what Rental Control Act. That is only, so that's why whichever is less. So step 2 output is called as an expected rent. In our study material, they are given it as an reasonable expected rent. Maybe they can call, no problem. Yes, it is called as an expected rent. That means the government is expecting this much of rent from your property. Yes, can you tell me? Government is expecting this much of amount of rent from your property. Are you clear, ma? Now, but there is an expected rent, ma. Step 2 figure, but actual rent received. We have to compare these two things. Maybe in past you are doing the by hearting of these things. No need to by heart. I will tell you along with the reason. Example, sir, government expecting or department is expecting the only 1 lakh from your property as a rent. But you are actually received the rent how much, ma? 1,50,000. So can you tell me the equation, ma? Actual rent is more than expected rent or equal to expected rent. Sir, this is a red carpet case. Sir, if you earned rent from this property 1 lakh, that is enough for the department. But you earned how much, ma? 1,50,000. That's why government is very happy. So now, what is a GAV they can take, ma? Whichever is higher. This is only section 23 subsection 1 clause B. So whichever is higher, ma, GAV is equal to actual rent. It is a red carpet case. The government is very happy now. So more than their expectation you earned. So that's why it is an GAV is equal to whichever is higher. That is in section 23 subsection 1 clause B. Can I take the one more case, ma? Sir, you government expectation is 1 lakh, but you earned only 50,000 amount, ma. So can you tell me happy or sad, ma? Department always sad only in this case. So they will ask the reason. Sir, why you are not meeting our expectation? You can earn exactly 1 lakh from the property at least, but you earned only 50,000. What is the reason? If you are saying, sir, vacancy is there, sir. I'm given my property for let out for some months only. If I am given the throughout the year, definitely I can meet your expectation. Because of vacancy only, I am not earning as per your expected rent. So that's why now whichever is lower, they are providing the relaxation. Yes, what is it? Whichever is lower, that is section 23 subsection 1 class C. Important ma this one? Yes, because of vacancy, if you are not earned as per the government expectation, whichever is lower, they can take it as GAV. Yes, whichever is lower among these two things, 50,000. That is an actual rent is treated as GAV here. Now, sir, there is no vacancy, sir, but I am given this property for let out to my relative. So that's why they are not paying that amount properly, or I am giving it to that my relatives or friends, etc. Because of any other reason, your expectations, your actual rent is not meeting that expectations of the department. Now, whichever is higher only they will take. So I don't know. You are earning just 50,000, but I'm taken GAV as on 1 lakh. This is only notional rent we are taken. Sir, I'm earning 5,000 only. How you can take the 1 lakh as an GAV? This is only the notional GAV. Yes, notional rent. Actually, you are not earned. You earned only 50,000, but I will take the GAV as an 1 lakh. By using this 1 lakh only, I can calculate the what income from house property. Remember, so here whichever is higher we are taken, whichever is higher, if you want to take always section 23 subsection 1 class B only. If you are taken the lower in case of vacancy, that is in section 23 subsection 1 class C. Sir, are you clear up to now? So we can discuss some problems also how to compute GAV. Please remember, whether you meet it over and above the government expectation. Yes, GAV is whichever is higher. Sir, I am not at all meeting the government expectation. Reason, if vacancy, whichever is lower. Why you are not meeting the government expectation, sir? Because of vacancy, whichever is lower. Sir, any other reason? Okay, you are not meeting the government expectation. Any other reason if you are saying whichever is higher only GAV. Whichever is higher among these two only treated as what GAV. Don't buy hurt it just learn the concept why they are given the higher and lower things. So if you are given confirmation, then we can proceed with the next thing. Yes, all of you, Kiran, Shanu, Nikila, Varsha, Vijay, Kirtana. Now, if standard rent is not available in the question, if standard rent they are not given, don't apply step 2. So don't apply step 2. So step 1 result only directly you can take it as an expected rent. What is that we can set off against the what expected rent. Get lost, why you are asking that? So listen concept. Yes, remember. Sir, if standard rent is not available, what is the thing? So step 2 is not applicable. Then we can treat the step 1 result only expected rent. Now, sir, when we can apply the 23 subsection 1 clause C, when we can apply the section 23 subsection 1 clause C, what is that whichever is lower. You know already, if that property is an let out property, second one, if there is any vacancy is there, because of such vacancy, what happened actual rent is less than the expected rent, in such a case, we can take the GAV as an whichever is lower. What is that whichever is lower, ma? Actual rent. Clear? Are you clear up to now? Sir, when we can apply the section 23 subsection 1 clause C, that is nothing but whichever is lower only we can take it as an GAV. If these three conditions are satisfied, then only we can take ma. First of all, if that is a let out property, if that property is having that vacancy during that previous year, because of that vacancy only you are not meeting with the government expectation, then you can treat that GAV as an actual rent, whichever is lower. Sir, for GAV computation, we have to take the actual rent received as an one variable. How to calculate the actual rent received? Sir, example, I have a right to receive the actual rent for the 12 months, because house property always following accrual, always following that accrual basis. Yes, remember, from that means even though you are not receiving 12 months rent also, yes, we can tax on the 12 months rent. But if any unrealized rent is there, 2 months rent we are not received, if that rule 4 conditions are satisfied, remember what is that? If rule 4 conditions are satisfied, then we can remove the unrealized rent from the actual rent receivable. Then finally we can get the actual rent received. Sir, what is that variable we can take? Ma, actual rent received exactly. But we have to take the on accrual basis actual rent receivable. But if any unrealized rent is there, if rule 4 conditions satisfied, we can reduce the unrealized rent from the actual rent receivable and we can get the actual rent received. Now, take the condition 1. That means rule 4 condition 1, agreement is bona fide. So 2 months rent is not given by the tenant. The tenant is called as a defaulted tenant, should vacate the property. Yes, defaulting tenant is in the not in that occupation of any other property of an what ma owner. Sir, he is doing the default in the payment of rent. You should do that reasonable steps for the vacation. And next, you should not give the shelter to that same defaulting tenant in any one of your other property. And the fourth one, you have to take the reasonable steps for recovery. You have to send that notices and you have to visit the SSC premises for collection of this rent. If all these conditions are satisfied, unrealized rent can be reduced from the actual rent receivable for calculating the actual rent received. Now, sir, if any unrealized rent is there, what is the treatment we can follow, ma? Yes, so as per Income Tax Act 1961, always they are saying you should remove this unrealized rent if rule 4 conditions are satisfied from the actual rent receivable, then you will get what, ma? Actual rent. But as per income tax returns, while you are filing the return of incomes, they are removing the unrealized rent from the, yes, they are removing the unrealized rent from the GAV directly. GAV directly. So that means from GAV you can remove the unrealized rent. You can remove the municipal taxes also. Then you will get what, ma? NAV. Sir, in your exam, you can follow this one, but in that note point you can mention we have an alternative treatment from the unrealized rent if rule 4 conditions satisfied, that can be directly deductible from the GAV also. So this is just update, ma. While you are filing the return of incomes, definitely you will get some doubt. If you are written this as a note point in your exam, yes, definitely the better impression can be created. But what is the treatment always we can give in our solutions, ma? Unrealized rent can be reduced from the actual rent receivable for getting the actual rent. Clear? Now, so I will give you Yes, two examples for GAV computation. Then we can start these some problems also. Remember, house 4 I want to do. House 4 GAV I want to do. Sir, municipal value given, fair rental value given. So house 4 related. So we can start So whichever is what higher. Step 1 is nothing but municipal value, fair rental value, whichever is higher. Can you tell me whichever is higher 25,000. Step 1 output you will get an 25,000. In your exam also you have to perform in this way. Sir, I am in live. How I can clear your doubts, sir? After some time you can ask. Okay. Don't do that interface issues, sir. Okay. 2. Step 2. What is that? Step 2 we can do, So 25,000 is step 1 result. We have to compare with the standard rent. Can you tell me standard rent is mentioned in this problem? No. If they are not mentioned the standard rent, step 1 result only we can treat it as what expected rent. What is that? Step 1 result only treated as what expected rent. So that is only the note point I mentioned. If standard rent not given in the question, step 1 only considered as on what expected rent. In third step, so we have to compare the expected rent with the actual rent received. Can you tell me actual rent received is how much 30,000. Actual rent received is 30,000, but expected rent is 25. So government expecting just 25,000 only from you, but you earned how much amount 30,000. Yes, can you tell me what 30,000. You are earning more than the government expectation. So that's why here whichever is higher, section 23 subsection 1 class B. So that is how much 30,000. Clear? So I can take the one more question for computing the GAV. Yes, you can do these references also in your handwritten notes now. In the example number 4, I want to compute the GAV for house 2. GAV for house 2. Please remember, municipal value given, fair rental value given. So whichever is higher you can take. What is that higher 750 you got. Whichever is higher 750. So that should be compared with the standard rent. Whichever is lower. Can you tell me what is the standard rent mentioned in the question 280. So whichever is lower 280. So whatever that output you got in step 2, that is only that expected rent. Now expected rent is 280. Remember, actual rent per annum they are given. This is an actual rent receivable. But per annum you can receive the 300, but property is vacant for how many months? 2 months. That means how many months rent you can actually receive? 10 months only. That's why it is given for 12 months. But now I want to calculate it for how many months? 10 months only. Because the property is vacant for 2 months. So if I am calculating that, I got an 250. I got in what 250. Remember, here your actual rent is less than how much amount expected rent. Government is expecting 280, but you earned how much amount? 250 only. Sir, remember, this is a let out property. And in this question, they mention the vacancy. I want to know the reason why you earn the less than the expected rent. Definitely they will ask the reason. Now I need to find out the test for applicability of section 23 subsection 1 class C. If any vacancy is there, yes, because of that vacancy and this less amount, you have to prove that. So that's why if vacancy is mentioned in the question, automatically if you got a less than the government expectation, you have to prove this by using this step. Sir, because of that vacancy, I received only 250. If no vacancy, sir, because of the 2 months vacancy, I haven't 250. If there is no vacancy, definitely my actual rent will become how much, ma? 300. Now, expected rent is 280. Can you tell me? If there is no vacancy, I can earn more than your expectation only, sir. Because of the vacancy only. Because of the vacancy only, I am earning the less amount. Because of the vacancy only, I am earning the less amount. If there is no vacancy, I can receive the more than your expectation. Here, reason due to vacancy. So that's why whichever is lower, you can take it as an GAV. That is an 250. Are you clear, ma, up to now? Yes, CMA inter students, can you tell me, are you clear up to now how to compute GAV? In your exam, if there is a let out property, while you are computing GAV, if there is any vacancy period given, you have to check. Because of the vacancy, maybe you can earn the less than expected rent. If there is no vacancy, definitely the condition can be reversed. Please check that thing thoroughly. In your exam, you have to check that thing thoroughly. Now, I will go with the one question directly. Yeah, one question, I will go directly. Sir, illustration 2, in that they are given the illustration 2, they are given the, yes, Thakur is an owner of the 3 houses. Okay. So house 1, house 2, house 3 they are given. But now I want to cover the, remember second house related. Remember second house I am taken, ma. Please check it. House situated in Kolkata. He transferred this house to this wife in which year, ma? 1997. Yes, without any consideration. Without any consideration. That means gift given to wife. Municipal value is given 5 lakh. However, she uses that property for that what basis, ma? Own residential purpose. This is an self-occupied house. But for this house, who is a deemed owner, ma? Husband is a deemed owner. So how to identify that? Municipal taxes paid 18,750. So they have taken that loan for that house for repairing, and loan still outstanding for this year. They paid the 1,65,000. Out of that they paid 1,45,000. So now we can calculate the house property related. Remember, it is an self-occupied. But even though that property registered owner is wife, but we have to tax that amount in the hands of, yes, Thakur only. Here, Thakur is nothing but treated as deemed owner for house 2. But it is a self-occupied. Directly we can start with the NAV as a nil. So there is no municipal taxes related deduction. But we can take only interest on borrowed capital. There is no standard deduction also. But for repairs we are using, ma. So that's why interest on borrowed capital is restricted with the 30,000. Yes, 30,000 only. So that's why ultimately loss 30,000 is there. Sir, I will tell you why you are restricting, sir. Because 1,65,000 interest is there. But if you are taken for repairs, Yes, renovation, reconstruction purpose, that is restricted with the 30,000 ma. I will tell you after some time. Are you understood this part of the question ma? So remaining houses we can discuss after some time ma. But remember second house here deemed owner concept we applied. Maybe you can say, sir, wife is a registered owner, but the deemed owner is Thakur. Here deemed owner concept will apply. Are you clear ma? Yes. Now, so remember, next concept in our discussion, we have to start with the municipal tax. Yes, always income from house property, we have to pay the tax based on accrual basis only. But whatever that unrealized rent is there, we have to reduce it from the actual rent receivable. Then you will get the actual rent. This actual rent only we can use it for the computation of GAV. Sir, what is that municipal taxes? Remember, municipal taxes can be allowed as deduction if that isn't paid by the SSC, and that too if that is allowed on cash basis, sir. Actually, if you paid, that is allowed. Sir, if municipal taxes paid by tenant, that is not allowed, ma. If that municipal taxes paid by owner, then only that is an expenditure. That's why we can take it as deduction. If municipal tax is more than a GAV, so then NAV shall become what ma? Negative. So NAV shall become negative. This case also possible. Yes, municipal taxes paid for the property situated outside India. Yes, no problem ma. I haven't one property in London. I paid some municipal taxes to the UK government. So that is also you can take it as deduction while you are calculating that income from house property in India. That means for foreign house properties, if you paid that foreign municipal taxes, if that is taxable in India, that municipal taxes also allowed. And very important point for exclusively CMA final examinations ma. One property is in the hands of an SSC, so that is he's taken as an 25 years ma. But father holded this property for 25 years, grandfather also hold it for 25 years, children can hold for the 25 years in future, grandchildren also can hold 25 years. Previously municipal taxes are not paid ma. Okay, now SSC paying the municipal taxes for past 50 years, and present 25 years also he paying, and future 25 years related also he is paying. That means totally now he is paying for that 125 years. Yes, it is possible ma. Yes, definitely. If you want to pay that municipal taxes for unlimited number of years also, yes, municipal tax authorities will accept that municipal tax. Now remember, municipal taxes, if you paid for the present year and for the past years, that is allowed as deduction. If you are paid for the future years, that is an advance municipal taxes will not allowed as deduction. Remember, this is a very important point ma. Present year if you paid anything, past years related if you paid anything, that alone is allowed as deduction ma. If you paid any advance municipal taxes to the municipal tax authorities, you will not get any deduction as a municipal taxes paid. Sir, I paid actually. Yes, they will collect it also. But for getting the deduction of municipal taxes, can you tell me which taxes is allowed ma? Past one and the present year one ma. If you are paying for future, that is not allowed as deduction. Now, deductions under section 24. Can you tell me how many deductions are there, ma? Two deductions, ma. One is a standard deduction. Another one is an interest on borrowed capital. Interest on borrowed capital. Sir, why? Sir, in every house we have to incur that some repairs, ma. So renovation, etc. So department will not calculate, these are all the repairs and yes, renovation related expenditures. So that's why for the purpose of repairs and collection charges, so they are given the standard deduction. Whether you are incurring expenditure or not incurring expenditure also, that is irrespective. So always every SSE can take the standardized deduction, because I'm incurring the yes some expenditure with related to house property related door. Government will verify actual expenditure incurred for every house. That is not possible. So that's why whoever incurring that expenditure, whatever that expenditure is incurred, that is an irrelevant. We can take the standardized deduction 30% of the NAV. 30% of what, ma? NAV. Yes. Next, ma, interest on borrowed capital. It is very important. Listen carefully. Interest on borrowed capital. Please check it out. Sir, I am borrowing some loan, ma. On that, I am paying the interest. So, if that loan utilized for purchase, construction, repairs, renovation, reconstruction, if you are using that loan for any one of the five purposes, any one of the what, ma? Five purposes. So whatever that interest you paid, that interest is allowed on accrual basis, ma. Even though actually you are not paying that interest also, if that is an accrued that enough, you can take that amount as deduction. Now I want to classify that interest into two types, ma. One is an is if you are taken the loan for construction, ma, not for other purpose. If you are taken the loan for which purpose, ma? Construction purpose. Now whatever that interest you paid, now I am classifying that interest into two, ma. Pre-construction period interest. Before construction completion, whatever that interest you paid, that is a pre-construction. Next, post-construction, after construction, or we can call it as a current year interest also. Interest always includes the two things. If you are taken the loan for construction purpose, ma, before construction completion interest, that is an pre-construction period interest. Second one, we can take it as a post-construction or current year interest. All together, we can take this amount as an what, ma? Deduction. So remember this point, I am talking about the if you are loan taken for construction purposes. Yes. Can you tell me if you are taking the loan for the any one of the five purposes that is allowed on accrual basis under section 24B. Now I want to talk about the pre-construction period interest. If you are taken any loan for construction purpose, example I will tell you. Yes. Example I will tell you. I am taken the loan in the year 1, ma, for construction. Construction completed in the 4th year. Before construction, how much interest I paid during the first 3 years, ma? 3 lakhs I paid. Sir, these 3 lakhs, I can't take it as deduction in the year 1, year 2, year 3. What is the reason? If I have an house property, I can start the yes computation of income from house property format. Yes, this format I can apply. Can you tell me if this format can I apply in the year of house property come into existence only? Then in that occasion, I can take the interest on borrowed capital as a deduction. But first 3 years we don't have any house. So that's why we can't calculate the income from house property. So that's why in which year we can start the income from house property computation ma? Year 4 only. So that's why pre-construction period interest will allowed as deduction in the year of 5 equal annual installments from that construction completed year. So construction completed year, current year interest always 1 lakh you have to pay every year ma. This is called as a post construction period interest, but a pre-construction period interest is allowed as deduction in how many installments ma? 5 installments. Are you clear ma? Are you clear? Remember, sir, construction purpose, if you are taken loan before construction completion, that is a pre-construction period. In that period, whatever that interest is there, that is a pre-construction period interest that will be allowed as deduction in 5 equal annual installments from that year of construction completion. So what is the reason, sir? In this year we don't have any house. How we can take the deduction? So that's why the deduction can be taken by the SSE from the construction completion year. Now I will define the pre-construction period. I will define the pre-construction period. Remember, there is no repayment of loan. We are not at all repaid that loan. Now what is that pre-construction period? I will tell you. Loan taken on 1/4/2018. Construction completed on this date ma. So remember, construction completed date immediately preceding 31st March, please take. Remember, construction completed immediately 31st March you have to take. What is that? Before this date, what is it? Immediately preceding 31st March ma? 31st March 2024. This period is called as pre-construction period. In that period, if any interest is there, that will be allowed as 5 equal annual installments from that construction completion year. So that is allowed in next how many years ma? 5 years. Pre-construction period definition, it should be started from the date of loan and it is ended with the construction completion date immediately preceding 31st March. Then, so up to this date it is a pre-construction period. Next we can take the every year as an what ma current year interest, because here loan is not at all repaid till now. If any repayment of loan is happen, yes ma, construction completed on this date ma, immediately 31st March if you are taken this one, but repayment is done before that day only. So that's why repayment date is end of the what ma pre-construction period. Pre-construction period is starting from the 1/4/2018, but repayment is done before that immediately preceding 31st March. So that's why pre-construction period is nothing but what ma? This one only. Sir, in exam also we have to check whether repayment is done or not done. Are you clear ma up to now? Yes, give me confirmation up to now. Yes. Now, ma, immediately, this point I want to start, ma. Sir, what is that amount of interest on borrowed capital? We can take it as deduction. Is there a limit? Yes, limits are there, ma. This you should remember. Limits are there. Please remember. If this is an let out property or deemed let out property, in this deemed let out property, we have an income. So that's why we have an GAV minus municipal taxes, NAV standard deduction you can take, and interest on borrowed capital, whatever that amount is accrued, the total amount you can take it as deduction. There is no limit in case of deemed let out as well as let out. In case of self-occupied, unoccupied property, I want to limit this interest deduction because you don't have any income. So deduction I want to limit to the 2 lakh if conditions are satisfied. How many conditions, ma? 4 conditions are satisfied. What are the 4 conditions? The first condition, loan should be taken on or after 1/4/1999. If you are taken loan for the construction or purchase purpose, if you are taken for construction purpose, the construction should be completed within the 5 years from the end of the financial year in which the loan was taken. If you are taken for construction purpose, that construction must be completed within 5 years from the end of the year in which the loan was taken. The last one is a deemed to be satisfied always, ma. We have to take a certificate from the lender. We have to take a certificate from the lender. If all the conditions are cumulatively satisfied, then we can take the deduction at the rate of how much amount, ma? We can take the deduction at the rate of how much amount, ma? We can take the deduction at the rate of 2 lakh. If not, any one condition is not satisfied, then you can take the 30,000 as an deduction. So remember that all the 4 conditions, if 4 conditions are satisfied, 2 lakh, otherwise 30,000. Now one more thing, ma. One more thing. Sir, for every house, I will get the 2 lakh or 30,000. No. This deduction in case of self-occupied per SSC. That means if I having the 2 self-occupied house properties, for 2 self-occupied house properties, all together I will take 2 lakh, ma. Not per house, per SSC 2 lakh or per SSC 30,000, not per house. Are you clear? Sir, I haven't 2 house properties, ma. The 2 self-occupied. For all the 2 houses per SSC, 2 lakh is the maximum amount we can take. Per SSC, not per house. Now, these are the important note points we have, ma. Yes, remember. Yes. Mr. A is seller, ma. Is selling his house property to buyer Mr. B. Who is a buyer, ma? Mr. B. Agreed price 50 lakh, but he paid only 40 lakh, ma. Now, whatever that unpaid purchase price is there, so now seller is taken this unpaid purchase price as a loan. Sir, you are required to pay 50 lakh, but you paid only 40. The balance I will treat it as a loan given to you, and that I will collect the interest. Now, yes, remember, you can claim this interest on under section 24B. Sir, if you are taken any loan for purchase, construction, yes, repairs, renovation, reconstruction, that is loan. On that loan, whatever that interest you paid, you can claim the deduction under 24B. Unpaid purchase price, for purchase purpose only, they are treating this as a loan. On this loan, if any interest is there, that interest also, yes, buyer, while calculating the income from house property, he can take this as a deduction. Unpaid purchase price is treated as a capital borrowed, and if any interest paid on that, that is allowed as 24B only. Deduction will be allowed as what ma? 24B. Now second point. Loan 10 lakh ma. First year you are not paying the interest, but it's okay allowed as deduction because on accrual basis. Second year interest is there, that is paid ma, allowed as deduction under section 24B, but they are charging the interest on unpaid interest. In first year you are not paid some interest, that's why I'm charging the interest on unpaid interest. Sorry, that is not allowed because it is an penalty like compensatory. Loan if you are paid, so loan related interest, even though not paid also you can take deduction, but here you paid, that's why you can take deduction. Year 1 you can take, year 2 you can take, but in second year they are collecting yes interest on this unpaid amount, that is not allowed. So it is like penalty or compensation only, so that's why it is not allowed. Are you clear ma? Remember, loss from house property you got. I think CMA final students are waiting for this point. How can I say that this point directly? So inter students are knowing that all the concept, are learning the concept in a slow manner. So directly I can't jump to this point. So that's why I think you are asking this point only. If you haven't patience and if you have wait for some time, I can tell you. Otherwise you are asking whatever the point you want in the live session, I can't deliver. If you have felt bad also, no problem about me, but I can't deliver that all the points, whatever the points you want. Now I am taking that CMA inter students class. But you are asking that whatever the doubt you have, that instantly if you want to get a clarification of the doubts, that is not possible for me. Yes, thank you. Now, if I having the loss from the yes house property, yes, if SSE following the normal tax rates and old regime things, yes, that loss from house property can be set off against any other head, but to that extent of what ma? 2 lakh. But whatever that amount is more than 2 lakh is there, that you can do that carry forward to the next assessment year. Yes, you can carry forward to the next assessment year, and it can be set off against the income from house property in the next year. Now, if you are following the default tax regime under section 115 BAC, you can't set off the house property loss with the other head. Even 2 lakhs also you can't set off. Are you clear? And you can't carry forward this house property loss also to the next year. You understood, ma? Yes, this is only the many students are asking as a doubt. Sir, if I having the loss from house property, what can I do? If you are following the normal tax rates or old tax rates, yes, you can set up with the any other head maximum 2 lakh. So whatever that over and above 2 lakh is there, yes, you can set up with the any next year's house property. If you are following the default tax regime, you can't set off and you can't carry forward also to the next year. So this point already discussed ma. Per house 2 lakh or 30,000, per SSC ma, per SSC we can take the 2 lakh or 30,000, not per house. Yes, remember these points are very important ma. If any unpaid purchase price treated as loan, on that loan if you are paying interest, that is allowed as deduction under 24B. Interest is paid or not paid also, that is allowed as deduction. If any unpaid interest related interest you pay, sir, loan related interest allowed, unpaid interest related interest is not allowed. Next, what is that? Loss from house property treatment ma, it can be set off against other heads but up to 2 lakh in case of old regime as well as normal. Now we can call it as an optional also, but under default tax regime it cannot be set off and it cannot be carried forward to the next years also. Now, it is also important point, ma. Sir, Access Bank loan I am taken. Yes, Access Bank loan I am taken. Till now 10 lakh cleared, ma, but 15 lakh outstanding is there. But interest rate is very high in Access Bank generally. So that's why I want to take the loan freshly from the SBI in order to repay the old loan. In order to repay the what, ma? Old loan. Now fresh loan interest is allowed as deduction under 24B. Yes. If you are taken any fresh loan, that fresh loan is taken for the repayment of original loan. So now whatever that interest paid with respect to the fresh loan is allowed as deduction. Is allowed as deduction under section 24B. So because whatever the loan you are taken, that is entered into the step into shoes of what, ma? Original loan. So that's why it is allowed as what, ma? Deduction. It is allowed as what, ma? Deduction. Now, sir, very, very important, ma. If SSE opted the optional tax rate or normal tax rates, these are the deductions you can take directly. If let out property, deemed let out property, standard deduction you can take 30% of NAV, and interest on borrowed capital, there is no limit, ma. There is no limit. In case of self-occupied property, unoccupied property, yes, remember 24A is nothing but nil, and interest on borrowed capital, if 4 conditions are satisfied, 2 lakh. Otherwise what, ma? 30,000. Otherwise what, ma? 30,000. Are you clear, ra? Remember, this is generally we know already. Whatever we are discussed in the earlier discussion, if the SSE following the normal tax rate, or if an SSE following the old tax rate or optional tax rate, yes, these are the only the deductions we can get from the income from house property. Suppose in that question, if they mentioned as an SSE following the default tax regime, that is an 115 BAC. 115 BAC. What are the deductions you can take, ma? For let out property, there is no change, ma. For let out property, there is no change. Whatever that previously we are taken, that is the same answer you will get, because all the things are same. Please take. In case of self-occupied, unoccupied, your answer will be 0. Why? There is no standard deduction. There is no interest on borrowed capital. Ultimately, here your income from house property, always you will get a 0 only, because NAV 0, standard deduction 0, interest on borrowed capital 0. Your answer also you will get as a 0. Are you clear? Differences you should learn, ma. If you are following that old regime, yes, you will get interest on borrowed capital, standard deduction, yes, you will get. In case of self-occupied, standard deduction you can't get, but interest on borrowed capital you will get 2 lakh or 30,000. But if you are following 115 BAC, yes, so same answer you will get for that income from house property from let out or deemed let out. But if you are following that 115 BAC in case of self-occupied, unoccupied, you will get an answer as an what, ma? 0. Why? Interest on borrowed capital you can't get, standard deduction also you can't get. Now, this is only the heart of the entire chapter. Now we can discuss some problems quickly. Remember how to calculate GAV in different statuses of house property. How to calculate GAV? I will close it down within half an hour. Don't think about the timing. Just concentrate on the session, ma. So if you are listening up to now, if you are leaving this session after this discussion, also you will not get the full marks. Remember, status of house property, how to calculate GAV. If that isn't fully self-occupied, NAV is 0. Fully unoccupied also 0. But if it isn't fully let out, how to calculate? I am given my one property fully let out, ma. So I want to use these 4 variables for calculating the GAV. Step 1, municipal value, fair rental value, whichever is higher. Step 2, step 1 result are standard rent, whichever is lower, this is an expected rent, and we can compare the actual rent and expected rent, that is whichever is higher or lower we can compare, that is only already we discussed. Now, first three statuses related GAV computation you know very well. Now I want to start the question related to deemed let out property. You have to solve the problem also. Yes, from your ICMA study material, deemed let out property questions are there. Yes. What is a deemed let out property? Yes, I will explain you ma. How we can treat one property as a deemed let out property also I will explain. Listen. SSE having, yes, Mr. X having, yes, how many houses, ma? 7 houses. He's saying that 7 as an self-occupied. No. For individual or HF, we can give the benefit of self-occupation only for 2 houses. More than 2 houses if you hold. So, benefit of self-occupied, we can give it for that how many houses, ma? 2 houses. Yet that option of an SSE only, any 2 houses, he can use it as an self-occupied. Over and above 2 houses, whatever is there, yes, other self-occupied, unoccupied, we can treat it as a deemed let out only. We can treat it as what, ma? Deemed let out only. Are you clear? Yes. Now, example, SSE having the 3 houses, ma? House 1, house 2, house 3. House 1, house 2, house 3. How to calculate the income from house property. So these 3 he is saying as an self-occupied only, but we are given the option of self-occupation for 2 houses. In option 1, he is choosing these 2 as an self-occupied. For this house, we have to give the deemed letter. Next, he can follow the another combination. Next, these 2 as an self-occupied. Next, yes, this is a mandatorily we can give it as a deemed letter. Next is following these 2 houses as an self-occupied. These 2 houses as an what ma? Self-occupied. Next one is what ma? Deemed letter. So like this, if you computed the total income from house property, if you computed the total income from house property, can you tell me in which option we got a lower value ma? Option 2. So that's why Mr. X can treat the house 2, house 3 as an self-occupied and house 1 as an what ma? Deemed let out. So then only he will get the tax liability as an what ma? Minimum. So based on the tax liability minimum only, we can choose that houses. That's why at this option of an SSE only, he can treat that any one of the 2 houses as an self-occupied. Then we can treat the remaining as an what ma? Deemed letter. Sir, in case of self-occupied, what is a GAV or NAV you know. But in case of deemed let out house property, how to calculate GAV, I will tell you. We can compare the step 1 ma? Municipal value, fair rental value, whichever is higher. Step 2, municipal values, fair rental value, higher amount. We can compare with the standard rent, whichever is lower. But we are treating it as a deemed let out, but actually we are not receiving any actual rent. So that's why step 3, no need to perform. GAV is nothing but expected rent only. Here, actual rent is not available ma, because you are not at all receiving actual rent. That's why only we can use the 3 variables for computing the GAV. In case of deemed let out house property, how to calculate GAV? By using 3 variables only. What is the reason? We are not at all receiving any actual rent here. So that's why without actual rent, we can't perform step 3. That's why step 2 answer only can be treated as GAV. Are you clear ma up to now? Now, sir, next status is there. I have one property, sir. Part of the property I am using it as an let out. Part of the property I am using it as an self-occupied. Now we can discuss one yes question for this. How to calculate GAV? So we can calculate the self-occupied property separate income, let out separate, then we have to combine these two. Sir, here please treat self-occupied let out. So how to calculate let out property GAV, you know? Yes, as it is like an what ma? Fully let out property. So we can start the one problem. Exclusively we have one problem for this ma. Yes, I will open illustration 3. Yes, please check. Karthi is an owner of the house in Durgapur. House divided into equal residential houses. One used for the residential purpose, another used for that let out purpose. What is the rent we are receiving ma? 8,000 per month. Within that also, there is a vacancy is there in that let out portion ma. 2 months vacancy is there. Standard rent they are given, municipal rent they are given, municipal value, fair rent, municipal taxes, light and water charges, interest on borrowed capital and repairs also there. They are asking compute income from house property. SSE is following the old regime. Now, we can treat the two houses separately. Self-occupied related income we can calculate and the let out related income also we can calculate. Now, unit A is nothing but we can treat as an what ma? Self-occupied. Unit A self-occupied. Directly we can take ma self-occupied GAV nil, municipal value we can't take, NAV also nil, standard deduction also nil. But we can take only one deduction ma interest on borrowed capital. Sir, other than interest on borrowed capital as well as municipal taxes and yes, standard deduction, we can't give any other expenses as a deduction ma. Repairs instead of that we are given the standard deduction. So that's why we can't give any separate deductions. One municipal taxes we can give, standard deduction we can give, interest on borrowed capital we can give. So with respect to the repairs, yes, light charges, land revenue, yes, that all the things we can't give it as what ma? Deduction. Are you clear? No. So that means only one deduction we can get. Interest on borrowed capital 2,500 per month. Per annum how much you can calculate? Per month 2,500. So that means per annum 2,500 into 12. This is for entire house. Now unit A and unit B is equal. So that's why you can apportion in 50-50. So that's why 15,000 you can take here. Yes ma. Other than standard deduction, other than interest on borrowed capital, other than municipal taxes, we can't take it as deduction. But in case of self-occupied, we can't take the municipal taxes also as a deduction. Are you clear ma? Now, I want to calculate for the part 2. It is an let out ma. But can you tell me 2 months vacancy is there that you should remember. Now, shall I calculate that on my own ma? Remember, here these values for the entire house, but I want to calculate for the let out portion GAV. So that's why I'm calculating 50-50 all the things. If you are not doing that, the entire answer will be wrong. Can I calculate ma? Step 1 ma, municipal value, fair rental value, that is a 95,000. Yes, what is that ma? 95,000 municipal value, fair rental value, that is a 92,500, whichever is higher, that is a 95,000 I got. Step 2. Step 1 answer, standard rent I have to compare ma. What is the standard rent we can get ma? Yes, in this question they are given, but you have to apportion 50-50, that is an 81,000, whichever is lower. What is that? Whichever is lower? 81,000. Now, step 3, that is an actual rent ma. What is that actual rent ma? Yes, 8,000 per month. Sir, but 8,000 per month means 2 months is a vacancy. So that's why 8,000 into 10 months, that is an 80,000 is an actual rent. Actual rent is 80,000. But remember, expected rent is, this is only expected rent, is an 81,000. Sir, we are receiving the actual rent less than the expected rent. So that's why reason we have to find out. But here there is a vacancy. If no vacancy, what is that situation we can observe? If no vacancy, actual rent will become, yes, can you tell me 8,000 into 12 months, 96,000. Expected rent is 81,000. If there is no vacancy, definitely I can earn more than your expectation. Here, can you tell me, due to vacancy only, we are receiving the less amount. So now GAV is definitely as per section 23 subsection class C is whichever is what ma lower, that is an 80,000. GAV, yes, how much amount ma 80,000. You can follow my format also. Yes, you have to perform it as a working note. Now 80,000 is a GAV. Municipal taxes, can you tell me what is it? Municipal value on that 15%? Municipal value is, yes, 1,90,000 into 15%. Yes, municipal taxes, that is 1,90,000 into municipal taxes 15%. It is in 28,500, but it is paid for entire house. But per our house, it is divided by 2. Yes, that you will get an 14,250. You will get this amount. And the standard deduction you can remove. Then interest on borrowed capital. Yes, remember, interest on borrowed capital. Yes, directly they paid interest 2,500 into 12 months. That is 2,500 into 12 months, 30,000. Already 50% taken here, and here you can take 50%. Totally, you will get an income in that let out and loss in self-occupied. You can set up within this head. Finally, income from house property, yes, is 16,025. How many of you understood this question, ma? Sir, if any part of the property is let out, part of the property is self-occupied. Self-occupied answer is very easy. But while you are calculating GAV of let out, you have to apportion that all these values for computing the GAV. Clear? And you can do the, yes, some more questions also in that. Yes, ma, remember, yes, question number 4, they have in 3 houses, ma. Out of the 3 houses, second house is an, yes, partly let out, partly self occupied. How you are identifying that, sir? So ground floor is let out. First floor is an identical, means what ma? 50-50. So that is occupied for residents. So that's why house to income, how we can calculate ma? Some part is self-occupied, some part is let out. In the same way you can calculate, but it become very easy. But I'm expecting these type of questions in that exam. Don't left these questions as a choice. As well as demood let out property also important. Yes, you have to do the some questions from your CMA study material. Are you clear? Yes, give me confirmation up to now. If it is understood, then I will proceed further concepts and I will close it down within 15 minutes. Listen carefully. Are you clear up to now? Give me confirmation about understanding all of you. Yes. Now, next, one more type of property is there, ma. Sir, part of the year self-occupied and the next some part of the year let out. So, if this type of properties are given, how to compute GAV? Sir, these two are different, ma. Here, part of property let out, part of property self-occupied. But here, part of the year let out, part of the year self-occupied. Example, 9 months I am given for let out, ma. After creating the vacancy, I am only using it for the self-occupied. Here, there is no vacancy because 9 months is 9 months is let out. 3 months I am only occupying. That's why here, remember, there is no vacancy. Now, how to compute, ma? Municipal value, fair rental value, standard rent, you have to take for the whole year. You have to take it for whole year. So there is no apportionment, sir. 9 months only let out, sir. That's why 9 months values I want to take. No. Please take for whole year. If fair rental value not given, example, fair rental value is not given, by using actual rent only you can calculate. Suppose actual rent is 12,000, actual rent is 10,000, example, per month 10,000. Then, so per month 10,000, then calculate 12 months, that is an 1,20,000. That is only we can take it as a fair rental value. It is an important one. Some cases, if they are not given the fair rental value for this question, so nothing but what, ma, part of the year let out, part of the year self-occupied. If they are not given the fair rental value, by using actual rent, you can calculate the fair rental value. Sir, but last variable, actual rent, you have to take for let out period. So whole of the year means 12 months. But in this question, let out period means nothing but how many months, ma? 9 months only. Now, municipal tax, interest on borrowed capital, you have to take it for the whole year. There is no limit also. Remember, DLOP and part of the year let out, part of the year self-occupied, treated as let out only, and interest on borrowed capital, we can take the what, ma? Unlimited. Yes, what is that? Unlimited. What are the two statuses, ma? Deemed let out property and this last one always considered as a let out only, and please take that interest on borrowed capital as an what, ma? Unlimited. Are you clear? Yes. Next points, ma. One more discussion we have. Co-ownership. What is that? Co-ownership. What is a co-ownership, sir? As of now, we discussed if you are an owner of the property, how to calculate income from house property. If you are a co-owner with the others, how to calculate that income from house property, ma? Yes, example for this property, A and B are co-owners, equal share, ma. First, if that property is let out, if that entire property is given as a let out, please compute income from such a property as if that is owned by the one owner. Generally calculate income from house property if that is a let out property. Thereafter, example, 1 lakh you got, ma. Then apportion that amount and 50,000 in their co-owned ratio. Remember, please forget about the co-owned property. Please calculate income from house property that should be apportioned in the co-owned ratio. If these two properties are using as an self-occupied, each owner is using this property as an what, ma? Self-occupied only. Then how to calculate, ma? Compute income for each co-owner separately. Compute income for each co-owner separately. Now, so NAV will start with, because it is a self-occupied, in the hands of each co-owner, NAV will be taken as 0. but interest on borrowed capital per owner, per SSC, you can take 2 lakh or 30,000. So I think you know interest on borrowed capital per SSC, you can take the what ma 2 lakh or 30,000. This is an advantage ma. So this is a model given in section 26 ma. If you are a co-owner of the any property, how to calculate income from house property of that co-owned property? If let out, please calculate normally and apportioned in the co-owned ratio. If that is a self-occupied, in the hands of each co-owner separately you can calculate income from house property. Are you clear ma up to now? Next, one more concept. Yes, regarding this co-owned property, we have one question in our workbook. That is a last question ma. You can do. You can do easy co-owner. This property is given as an what ma let out. Sir, how you know about this is a let out? How you know about this let out property, sir? Yes, remember rent received is mentioned in this question. So that's why it is a nothing but what ma let out property only. So that's why please calculate the share. So that's why property is jointly taken. Yes ma, jointly taken ma. Ramesh and his brother. So that's why please calculate as an let out property income. So after calculating that, you have to apportion this income in that what ma co-owned ratio. So entire house related income 46,000, but Ramesh related you will get what ma 50% only. So just please calculate GAV. From the GAV municipal taxes and yes, you can take the standard deduction and interest on borrowed capital. Normally, please calculate as if that is owned by the one owner. So then after you can apportion that income in that co-owned ratio. In this question, what is that ma? 50-50. Are you clear ma? Here, can you calculate GAV for me? Municipal value, fair rental value, whichever is higher ma, like 1,60,000 you will get. Step 2, yes, you can compare the standard rent with the, yes, this one is only lower. So that's why it is only what ma expected rent. Step 3, what are the things we can compare ma? Rent received, that is an actual rent. Can you tell me 15,000 per month? 15,000 per month means for 12 months it is an 1,80,000 ma. You earned 1,80,000 as an actual rent, but their expectation is 1,60,000 only. Yes, can you tell me here whichever is higher ma? Yes, 1,80,000. Yes, GAV is equal to 1,80,000. With that only we are doing the problem. Please check ra. Now municipal taxes paid, but it is paid by the tenant ma, so that's why it is not allowed. If that is paid by owner, yes, that is allowed, but here paid by the yes tenant, that's why it is not allowed. It is not an expenditure to that owner, that's why it is not allowed. NAV you will get. Standard deduction, you know, on that NAV 30% ma, but interest on loan ma, remember for this yes, they are taken a loan, so that's why they paid this 7 out of 75,000 interest, they paid 71,000. Can you tell me on accrual basis you can take ma, on not cash basis? Municipal taxes is allowed on what basis ma? Actual payment basis, but interest is accrual basis related deduction 75. Now and they are taken a fresh loan for payment of what ma? Yes ma, interest on unpaid interest, it is not allowed. I clearly said that interest on loan is allowed, interest on unpaid interest is not allowed. Next one ma, hero taken a fresh loan in order to repay the original loan, that yes, already you know, if any fresh loan is taken for repayment of original loan, that interest is also allowed. That's why 5,000. Yes, can you tell me now total interest is allowed is an 75 plus 5, 80,000. What is that? 80,000. After removing these two deduction, 46,000 is an income from this owned property. Share is nothing but 50%. Share is nothing but what ma? 50%. So that is only I am saying now. If you are listen the theory, every point is in your hands only. So no one can cover the all the points as per CMA curriculum, but I am given the handwritten clearly. If you know, interest is allowed on accrual basis. Clearly I said, interest is allowed on accrual basis. Second one, yes, municipal taxes related point also. If paid by the owner only allowed, I said. And interest on unpaid interest not allowed, I said. Interest on unpaid interest, I said that. And if any fresh loan is taken, repay the original loan, that is also covered. So that's why please follow the discussions. Yes, you can do the problems on your own also. But you have to write the note points for that every question. Even though in their solutions they are not mentioned also, they are expecting the reason for the why you are not taken or why you are taken as a deduction also. So give me confirmation, and two more concepts are there. We can close within 10 minutes now. Please listen. Give me confirmation. Just within 15 minutes we can close this chapter. Yes, give me confirmation ma, from your side. Already note shared. Please check the at least the Telegram group. Recovery of unrealized rent, recovery of arrears of rent. These two are different ma. Unrealized rent means what is the treatment we can give for the unrealized rent ma? It is due only, but we are not received. So that's why yes, we can reduce it from the actual rent receivable while calculating GAV. What happened ma? In 1718 you have an unrealized rent. That unrealized rent, if rule 4 conditions are satisfied, that is reduced from the actual rent receivable. So that's why it is not taxed. In that 1718 we are reducing it from the actual rent receivable. Now in 24-25 we are receiving the unrealized rent. One tenant is not paid the 2 lakh in this year. So that's why the 2 lakh we are receiving from the actual rent receivable, and we are taken actual rent received only for the computation of GAV. So that's why here not taxed. Due but not received, yes, we are reducing. If that is received, we can give the tax treatment in the year of recovery, that isn't taxable, but 30% we can give it as deduction. Out of how much amount is taxable 70. Now the same treatment we can give it for the arrears of rent arrears of rent is happened because of disputes. Sir, all of the sudden owner increases the rent it is not due because of incremental rent or because of dispute only it will happen. Now, if that is due, we haven't tax treatment, we can reduce. It is not at all due, so that's why arrears of rent is not at all taxable, and in that year no tax treatment. But if that is received in the year of recovery, we can give the tax treatment with the deduction 30%. Remember same provision ma. If that is an unrealized rent also, or arrears of rent also, what is the treatment ma? Yes, it is taxable in the year of recovery under the head income from house property. Yes, even though SSE is not an owner in the year of recovery. Sir, you are an owner in the 1718, that's enough. In the recovery year, even though you are not an owner also, that isn't taxable. But can you tell me how much deduction we can give ma? 30%. We can give what ma? 30%. Are you clear? Please give me confirmation about the recovery of unrealized rent, recovery of arrears of rent. Ma, difference is nothing but unrealized rent means it is due but not received. Arrears means because of the disputes it is not due. So that's why no need to give the tax treatment. Yes, if rule 4 conditions are satisfied for unrealized rent, we can reduce it from the actual rent receivable while calculating the actual rent. Now, last concept in this session, composite rent. What is that, ma? Composite rent. Sir, remember, example, rice mill you can take, ma. In rice mill, building and plant and machinery, these two are inseparable. Let out of these two things are what, ma? Inseparable. Sir, what I can do with the building without a machinery? What I can do with the machinery without building? So that's why these two are inseparable. So that's why here entire rent, that means the building rent and the plant and machinery rent is taken as an PCBP or income from other sources. Example, I am an owner. I have a business of letting out of these rice mills, PCBP. I have only one rice mill. I am giving it as an what ma? Let out. That's why income from other sources. Composite rent means if you are receiving the rent from building along with the yes other assets, this rent is called as what ma? Composite rent. Example, you have to remember the rice mill. These two letting outs are what ma? Inseparable. So that's why entire rent from the rice mill is PGBP. If the SSE is doing the business of letting out of rice mills or one or two rice mills are there, generally he is given the let out of other sources. Next one, ma. Sir, I am given the building along with the furniture. Now remember, this building and furniture are separable only. Some person can take the only building. Some person can take the building along with the furniture. That's why two letouts are separable. So that's why building rent under AFHP, other assets related rent is IFOS or PCBP. SSE having the business of letting out of this furniture, PCBP. SSE having that let out of just furniture one time, that is an other sources. Clear map to know? You have to remember these two examples, then only you can do these MCQs. Many occasions we are receiving the MCQs from the composite rent concept. So two agreements are possible. Yes, I can take building, one agreement. I can take the assets, another agreement, separable. Two letouts are possible. Building rent IFSP and other assets IFOS or PCBP. Two letouts are not possible, sir. If I am taken only one letout only, in that case, entire things will be taxable to tax under PCBP or IFOS. So remaining, have some patience. Try problems from your already prepared material or from this material. Everyone is in your hands only. Everyone is in your hands only. Entire theory I covered. So no need to follow any other thing. Yes, if you have any doubt, you can reach me through the WhatsApp also. Yes, the remaining points you can try on your own. Whatever that I think 5% of the concept I left, but no problem. You can prepare on the own also. But remember how to calculate GAV in case of different statuses of house property. You have to read this chart. This chart only the heart of this entire chapter. So remaining like yes ma, remaining whatever the points I'm uncovered. Yes, please verify the handwritten notes already available in Telegram group. Yes, whatever the points I'm uncovered. Yes, go through further points also. That is you can understood easily. But GAB computation is important. And what is that question they are given? Part of the property is let out or part of the property is self-occupied. Either they are given the demo let out or fully let out. You have to identify. As per that only you can do the problem. Yes. Shall we wind up the session, ma? Yes, thank you.